Regarding the recession, Jason, yes, I have been forecasting the same recession, but I believe that a major shift in market mood has caused many to suddenly worry about it, which is one of the reasons it may finally happen now. The other issue, in my opinion, is that we may not yet be aware of all the negative information, the unknown unknowns. Indeed, none of us was keeping tabs on the carry trade in yen. Although we may have heard of it, it wasn't until this past week that we really gave it much thought. How many more items like that are there in the world? Additionally, I believe that this administration has a history of keeping things under wraps. To avoid getting political, they kept the B facility hidden for years. For those who are unaware, we are discussing the idea of black swans. It must be something you are unaware of and have a significant effect in order to have a black swan. This wouldn't apply to the yen trade because it didn't have a significant impact and people were aware of it, even if it wasn't front-page news. However, black swans might be seated there. Of course, the subprime mortgage catastrophe during the Great Financial Catastrophe is the most recent example of a black swan. That really had a huge influence, but no one knew about it. It was well known and had a significant influence. To characterize a black swan, you need both of those qualities. SX, you do realize that there might be black swans. You're implying that the Bank of Japan's retreat meant that the yen carry trade had little effect. We don't know what the consequences would have been if they had continued, do we? However, they didn't, thus the more you know, the better off those who are following the black swan tracker. Let's discuss Apple. I'll give you your flowers immediately. They're on their way to you. Just glance to your left. A huge bouquet appears because, as you anticipated, I didn't send you any real flowers. Instead, he looked to his left. However, these are your virtual flowers. I believe you were entirely right when you said that Berkshire Hathaway and Buffett would become less interested in a trade the less they discussed it in their publications, letters, and events. As far as I'm aware, Berkshire Hathaway has sold half of Apple, their biggest stake. Some claim it's because they don't trust the company. Some claim it's because they're overweight, and still others claim it's because Freebird wants to increase the amount of money on the books so he can make more acquisitions. Perhaps you could do your victory lap, Chamath, and then wheel. I believe Freebird double-clicked on this and took a plunge. I'm at a loss for words. He stops mentioning a corporation in his letters because he is selling, which it is, I believe, a tendency in their correspondence. It's a terrific, great read. Yes, and this is what took place. Okay, so let's go over this. Freebird. It appears that they have liquidated 55% of their Apple holdings since the year began. And here's what Berkshire's stock holdings were in their non-majority owned businesses. That is, companies that they do not directly own. At the end of the year, Nick, if you can bring up this picture with the pie chart. Additionally, Apple accounted for $174 billion, or 50% of their portfolio. Just a few days ago, Apple's stock price undoubtedly reached its highest point ever, but it has since declined as it was revealed that Berkshire had sold 55% of this holding since the year began. Accordingly, some people contend that they have an opinion regarding the competitive environment and the company's strategy. With the valuation multiple trading at almost 30 times earnings, some have claimed that it has risen too high. Since Berkshire purchased the stock in 2016, it has increased 900%. A nine-bagger, well done. Yes, and as you can see here at the beginning of the year, some might contend that the portfolio's percentage is excessively high at over 50%. However, I'll offer some counterarguments. When Warren Buffett evaluates the stocks he has chosen, he rarely conducts analysis on corporate strategy. He frequently talks about identifying outstanding managers who produce high returns and sticking with them for many years. Since he invested money, the company's management has remained the same, and the return profile for both invested and returned funds has only increased. He's content to be concentrated since they're producing more cash flow, paying out more dividends, and repurchasing more stock. He has placed significant wagers on individual businesses throughout the years, to the extent that occasionally he simply purchases the whole business, as he did with Geico in 1996. He frequently discusses the need of identifying a business with excellent management, a high-end product with locked-in distribution and fixed prices. The same is true in the insurance industry, where state regulators essentially authorize and set Geico's pricing. Because the government sets the rates publicly and Berkshire has the largest capital base and a cash-generating engine, the company has a moat. However, Apple is unregulated, and it is evident that the regulatory bodies who are in charge of the company are putting a great deal of financial pressure on it. Because Google pays Apple $20 billion annually to be the default search engine, there is a real regulatory danger in the Google antitrust case. We'll talk about the Google arrangement in a moment. Additionally, Apple has a close relationship with China, where they sell a majority of their products and conduct a large portion of their manufacturing. Apple faces a serious danger as authorities begin to scrutinize business ties with China. Users are tracked by advertising, and customers are also charged membership fees. Most significantly, we have discussed Apple's 30% VAT on its App Store, and how authorities are now intervening to examine this. Apple may experience financial hardship as a result of this shift because the company is not yet a regulated monopoly, even if it may be one in many ways. When they reach the opposite side, it begins to resemble a massive Berkshire-style company much more. That concludes my overview of Apple's current situation. I'm not sure whether you guys. Yes, I believe it's pretty deft, but I'm not sure. Sock, what do you think about this huge cash boost and what Warren Buffett and Berkshire Hathaway are thinking? Is it that he gained weight at Apple, or is he hoarding money because he wants to make inexpensive purchases as the recession approaches? Or, to put Freeberg's point, regulation. Buffett was sitting on the largest cash pile he had ever sat on, according to this chart that many people shared online during the global sell-off that occurred on Sunday and Monday. People aren't really discussing this because of the market recovery that followed, but it makes sense that Buffett is accumulating a war chest here and is in a relatively defensive posture. As you can see, he began making a lot of investments in 2021 to 2022, which caused the cash pile to decrease. Given the size of his cash pile, it would seem reasonable to assume that he believes that public stocks currently provide a poor risk-reward ratio and that he is, once more, slightly more risk-off. Chamath, how do you feel about the regulatory risk argument that Freeberg is putting forward here? Since he also sold a lot of BYD, which they have owned since 2008, I believe David is correct when Freeberg says that the China issue might have had an effect. You know, there's a Chinese electric vehicle manufacturer, so that might have contributed. To tell the truth, I have no idea. Hold on, you're implying reliance on China? He might have thought that the portfolio as a whole had too much reliance on China, because both of those depend on it. Perhaps yes, that's something I could purchase. That makes a fair amount of sense. However, it's important to keep in mind that these choices have been considered for at least a few quarters. Recall that the letter he sends was drafted months and months ago. It wasn't written yesterday. Therefore, I believe that these choices were made some time ago. If we're going to play conspiracy theorists, another reason is that, Charlie Munger may be beginning to compile a book in preparation for the smooth transition to Greg Abel following Buffett's death. You're implying that he wants to transfer it with less risk when you say that? Therefore, there would be a risk associated with relying solely on one stock or China. In order to facilitate a smoother handoff, he wants to make it extremely tidy. He wishes to pass down a well-structured book, or perhaps